The S&P 500 is hitting all-time highs, and Texas is putting $10 million into a digital assets reserve. Welcome to the War Room. It's July 2nd, and I'm your host, Carson Rich. I've got here with me the president and founder of Kingdom ROI, Eric Dunavant. I've got the CEO, Drew Brown, and we've got virtually our chief advisor of Paradigm and Intentionally Owned, Kristina Schuler. And I say we get started talking about economics, guys.
Let's do it.
One thing I noticed that I thought was interesting, and I kind of researched a little bit because we talk a lot about are we going to be able to bring manufacturing back to the United States, or at least become more of a manufacturing power than we have been. One thing I noticed was that our auto production was up 4.9% in May. And what that is looking at specifically is the IPI, which is the Index for Industrial Production. So if you look at actual cars made, we were down for the month for the first time this year. But this production index basically looks at the value of what we're producing. And that was driven by demand specifically for hybrids and electric vehicles is what caused this rise. And what I wanted to look at was essentially since COVID or before COVID, how are we doing as far as auto production? Once I saw this number, and what I found out is that we're on track to have the best year since 2019 this year. We haven't been able to reach 11 million vehicles produced in a year since 2019. We got to 10 in 2 years ago in 2023, and but this year we're on track to have the best year since pre-COVID. So. And that's interesting to think about whenever we talk about tariffs and things of that nature. Yep. And I promise you, they won't produce a bunch of cars if there's not demand for it. So they're producing, like I said, it could be our best year since 2019. So
no, I think it's definitely worth kind of keeping an eye on. One of the things too, if you think about production, and where we are in the South, I see this a whole lot more. I mean, we're not somewhere else in the country, so I'm not seeing it. But I am amazed at the number of auto manufacturing facilities that you can find if you take a road trip here in the South. I mean, between Toyota and Honda, and what's interesting is, and go to what, the purposes of the tariffs and what we're trying to do is create more production in the U.S. Those are technically international companies, but they're putting their manufacturing facility here in the U.S., hiring U.S. workers. And so, that's encouraging. One of the things I think that was in the report, so that all of you know, we're looking at the Rich report, which you can get a copy of. This comes out every week that Carson produces, was kind of balancing this off, that other production was down, but auto production was up. Or maybe even, you might know the specifics, it was like, the regular production was not as strong as in other areas as it is in auto.
Correct. The other sectors dipped by 0.3%.
And I think that's an interesting, at least my observation, and I think I'd love to kind of, if any of you have any other opinion, is if you're asking me where I think we've led in bringing manufacturing back to the States, it has been in autos.
Yeah, internationally, the response of we need to move things back here. Yeah. The response has been primarily from the auto companies saying we'll do it. That and the chip makers. So you've got some of that going on, which is really positive. I think it's really interesting that the manufacturing sector right now is still giving shrinking indications, as we moving into this, and what all that means. Some of it from my read right now is that it's kind of the reset and retool phase of moving. It's going to take a while for manufacturing to really ramp up. Yeah. Especially if you're building new facilities. But I think that as things are retooling and everybody's trying to figure out what do they need staff for and what do they need technology for, and getting some of that dialed out, right. So I think most of the money right now is going to consultants, right? Yeah, as they're getting all that set. It's something to really watch closely though, because I think ultimately, this is really good news for the manufacturing industry.
Sure.
But I think knowing what to do or how to go about it and getting ready for this is kind of in that, because I'm not sure that even all the big companies right now know exactly the best way to move into that.
No, I would agree.
Right, and specifically since we're on the topic of automobiles, and we'll talk more about this later. But one thing, and the one big beautiful bill that is currently being debated in the House right now. One of the things in that bill, which is over 900 pages long, but
it's big, whether it's beautiful or not.
Yeah,
it's big.
It's a big bill.
At the very least, it is big. But one of the things that is in that bill is if you buy a car that is assembled, the last assembly is in America, you will be able to write off the interest that you pay for that vehicle, which I think that's a big deal, and that's one of the ways that we've seen, I guess, this administration incentivize people to purchase and for other companies to produce their products in America.
Well, I think it is important that they're not only incentivizing the companies, they're also incentivizing the buying public, right? That's what they're trying to do with that. So that seems encouraging. We'll see.
Yeah. And the other thing related to, most of the other industries were down, like you mentioned. The other that was up was high-tech equipment, which was up 9.8% year over year. And so what that is computers, servers and chips, things of that nature. We've had a 20% increase, and these are, again, index values, 20% increase since 2019
now,
as it relates to the index. Go ahead.
So is that 20%, because I haven't looked at that data or anything.
Well, there was a slump from, I believe, 2019 to 2020.
Right, exactly.
But it wasn't by much. So the index values are, so in 2019, the index value was something like 94 or something like that. And then it dipped to maybe 90. And then we've recovered plus 20%. Well, really, I shouldn't say recovered because it was a small dip, less than you'd think. But again, these aren't dollar amounts we're talking about. It's specifically the industrial production index, similar to how you'd measure like a CPI index,
right.
Et cetera.
Yeah, but this is not a surprise, right? I mean, if we go look and think about it, between AI revolution going on right now and then the digital asset revolution going on right now, and you put two of those things together, and what do they need? They need tech and they need equipment. I mean, the thing that's most interesting to me, I think we've talked about before, just is it's the next turning, right? It's the next revolution of technology between AI and digital assets. Are we sitting in a version of the late 90s, 2000 time period of the fact that, technology is now this thing that's come out. There's new technology on. Is it the new internet or whatever you want to call it? It's AI and it's digital assets. Those two things, I don't think we can even begin to imagine what they're going to become over the next 5 to 10 years. What we can recognize is we are sitting in a moment of change. It's why those themes that we keep looking at keep coming up and keep being on our mind, is because what are the things that are driving this next turning, and that's why it's worth watching.
Absolutely. And the other thing I've got on the economy is that the S&P 500 and the NASDAQ did hit all-time highs recently. The S&P is above 6,200. The S&P 500 is above 6,200 for the first time in history. And I'm a chart nerd. I know y'all aren't chart nerds, but it's funny.
We hired you to be a chart nerd, by the way.
Yeah.
Thank you.
It's funny. You can actually look April 9th, which was the day that the administration paused the Liberation Day tariffs for 90 days, was basically the exact bottom of our dip, of our panic, you could say, as Nick Murray would call it. And since April 9th, we've had a straight recovery up to all-time highs. So I know you've got some opinions on stocks being overvalued and things like that. So I don't know if you wanted to speak on. I mean,
I can speak to it. I could speak to the fact that on an earnings basis, stocks are overvalued. I mean, Based on that, if we're simply looking at price to earnings ratio, stocks look expensive. That's and versus the amount of production we're seeing come out of the country. There's a lot of measurements and things like that are out there that speak to that. However, one of the things you also have to be aware of is the stock market will always do things you don't expect it to do, and you have to be able to, that's where people, I think, get in trouble kind of overthinking. Well, don't you see this and this is going on, so therefore I'm going to respond certain ways? I mean, I've been in this business for almost 30 years. Yeah, whatever you expect it to do is probably not what it's going to do, no matter what it is. The other thing I've talked about in other commentaries is when I walk into a year and a whole lot of people have one opinion, I'm just going to go take the other opinion because the majority of people are wrong. And so
almost 100% of the time.
And that's a reason why you don't, from my knowledge, you don't ever just go fully into cash, no matter how bad things look. It seems like you would rather, and it's something I've seen Nick Murray talk about, is that if you just, keep, maybe you diversify a little bit into safer things, but you wouldn't just sit on the sidelines and wait for something.
Well, so here's the thing about investing that I don't know that most people think about. Most people think I'm making a decision to go to cash. And one of the things that's important is you're never making one decision. When you make that decision, you're now forcing yourself into two decisions. I'm going to cash. Here's when I'm going to reinvest. And the problem is there's always enough worry and things to bother you, things to distract you that are out there that you will probably always make that second decision at the wrong time when you make the first one. That's what most people don't realize. They think it's one decision. It's not one decision. It's two decisions because you can't just get out. You have to decide when you're going to get back in. And I don't have data to back I don't have the data to back this up, and I wouldn't even know where to go look at it. I've heard enough people say it, and I believe that it's true, which is that's where most people get it wrong. Because they get out and then they actually typically get back in after higher than if they would have just stayed in.
So the attempt to operate in safety always flips the script on them. So they're buying high and selling low,
right?
Or first selling low and then buying high. And
the
so
opposite
of what you're wanting to do, and it's because of the timing of that. I wanted to address because the pattern of this is important for anybody listening to understand, because what you were saying, Eric, is that the predictability of the market, the unpredictability of the market is the highest predictable point in terms of how the market operates.
Bank
right?
on it being unpredictable.
On the short term. But there's two things going on. Is at any point in time, trying to figure out what the market's going to do is impossible. However, over time, there are patterns.
Yeah,
and the patterns move toward not panicking, right? The patterns reinforce that at some point markets correct. At some point, the overpricing tends to adjust itself at some point, and so the trying to figure out things, if we back up a little bit. And we're looking at the opportunities. We do the long game research like we're talking about right now, and then we're watching for the best timing possible. It's impossible to know exactly, but the pattern is that the strong companies will stay strong.
Yep,
and will continue to perform strong, and that with any adjustment, dip, or panic, there's always the other side to that. And so the recoveries always come before, right? So there's the pattern to look at. There's the long-term adjustments, which there's a predictability to that simply because of historical patterns.
Well, and I want to be careful because today the War Room is about us just kind of look at the economy and trends and things that are like that. So, but I'll let you address this a little bit if you would. When we inside of intentional ownership, and you can go over to our intentional ownership Paradigm channel. And we've got commentaries where we get deeper into. In the next few weeks, we're going to be stepping in and we'll be doing our commentary kind of on the next quarter. And we will get it. If you want that, go over to that channel. And we're specifically talking about how we're investment positioned and things like that. Using a common sense, and as we're just talking about this, there are things going over from a valuation standpoint that cause you to take a pause and go, is this the time to be more, because you can be more aggressive on that front or more conservative while still remaining invested. You can kind of shift that around. So Kristina, why don't you talk a little bit about that with this caveat? If you're listening right now, this is not specific advice to you, and you would need to be in an advisory relationship inside of our Paradigm Intentional Ownership for us to have that conversation with you. That's not exactly what we're doing today. I invite you over to that channel. But Kristina, why don't you talk to that a little bit?
Yeah. So I'll touch real quick. Drew, you had mentioned the word pattern, and I don't want to interrupt your thought. You were really driving a point home. But when we talk about pattern too, I think something that's important to highlight. Eric, you mentioned getting in, out of the market, 2 different decisions. Historically, what we have seen just in data that's out there in the investing world in general is that the recovery and the greatest highs of the market, if you will, come right after the lowest of lows. And it's that little bit of window that you have. I want to say data is like, what is it, like 10 days, Eric? That's just like right there in the smack middle, and you have to just time it ever so perfectly, which maybe you could do once or twice, but not every time.
Right.
So I think as we're thinking about that more broadly, specifically as it relates to our clients that we advise, of not wanting to, Carson, to your point, just go to cash, right? We have historically, even as of last year, gone in and evaluated kind of what's at the forefront, what do we expect, what's happening in the market, or what are people saying is going to happen, and then making a plan around that. And so there is the opportunity, Eric, that you had mentioned about going more conservative without totally getting out of the market. And our dividend portfolio is used just for that specific purpose, in kind of going a little bit more conservative, still being in stocks, which we know just from research have been, greatest drivers of growth long term, and just kind of dialing back on some things. So in terms of like growth oriented stocks, not to say they can't have their wins, and they can do quite well, but it's really just seeing what's at the forefront and pivoting and shifting without just going all to cash and selling. So going a little bit more dividend-based stocks, those are a little bit more stable, if you will, in terms of the grand stock market. But growth stocks can have their place. I think right now for us, though, we're kind of a little bit more hesitant and pausing, kind of observing from a bigger bird's eye view of what's going on with the growth stocks. A lot of people are kind of starting to get excited, though, and it seems that the market, to your point, Carson, is starting to trend upward in the past few months. But I think we're still going with a little bit more conservative approach because we're thinking longer term. This could inevitably be that we're just putting things off a little bit longer than anticipated. But I think, Drew, you had mentioned a correction. I think we're in that phase of, is it going to happen now, or is it we're just prolonging it for maybe later this year, early next?
Yeah, I mean, it wouldn't surprise me if we went into, a correction being defined by a drop up to 10%, 10% to 20 is until you get you're not, until you drop to 10, you're not even in correction. You're just in normal market. And a lot of people I think would be like down 8% would feel really ugly. Yeah, but for market definitions, that's not even a correction. I do want to make this comment because this has been around for a long time. I don't know that we've talked about it here. And then I want to leave this because I think that we could spend a whole lot of time here, and we do a whole lot more of that over on Paradigm Intentional Ownership on that channel. But there is a term that I grew up with in my growing up in the investing world, having been in this business almost 30 years. It's called climbing the wall of worry. That the stock market does a really good job of climbing the wall of worry, meaning you can create all these things to worry about and it will continue to climb anyway. And I think that's the thing we all have to kind of like, what's going on right now? We're climbing the wall of worry is what is going on right now. There's lots of stuff to worry about, but it's climbing. So
nice. The last thing I wanted to say on that one point before we get on to the Bitcoin strategic reserve in Texas is that the top performing sector this year, driving us up to the highs, has actually been communication services, so not tech. Tech makes up the biggest portion of the S&P 500, but communication services, so Google, Meta, Netflix, those sort of companies are were the top performing.
So we're feeling lonely and more connected than ever.
Right.
And we're driving that from a profitability standpoint.
Maybe so.
Starts when the stock market starts reflecting our the mentality of our culture to that degree. It's like,
Yeah.
Here we go. So Texas did sign a bill for $10 million Bitcoin reserve. I'm going to talk about that one, and I'm going to talk about a couple of the other states that have done a similar thing this year, which are going to be New Hampshire and Arizona. But specifically with this Texas bill, this is $10 million of taxpayer money, which is, I guess, sort of what you would expect with a reserve like this, is new taxpayer money coming in to fund this reserve. That's actually not what Arizona and New Hampshire did. But I did want to say that Texas, I guess this was kind of, if a state was going to do something like this, it would be Texas. They are very pro-crypto, and you know that because they have the biggest Bitcoin mining facility in America with 100 acres. So a third, and I'll do my best. We don't have Harrison here to explain this, but a third of all U.S. hash power comes from Texas, from Rockdale and Austin. And hash power, the way I understand it, is basically the power needed to mine Bitcoin.
Yep, that's exactly what it is.
Yeah.
Yep.
And so a third of all of the U.S. hash power comes from Texas specifically. But so like I said, New Hampshire and Arizona have passed a strategic reserve as well. The way this works, though, in New Hampshire is 5% of their total current investments can be reallocated to digital assets, so treasury notes, things like that. Now, that means up to 5%. 5% as it is today would be something like $500 million to $1 billion. So they'd be well above 10 million. So that's the upper limit is 5%. And so that's not new money. That's their current assets can be reallocated up to 5%. And then Arizona, essentially what they're doing is this is going to be seized digital assets or criminal forfeitures are going to be used to create their stockpile.
Yeah, we'll take what you did illegally, and then we'll just hang on to it.
Yeah, we'll just keep it for.
I think it's interesting though, especially. I mean, you look at how you're changing the conversation. It's interesting to watch the adaptation of digital assets into a accepted form of reserve or an accepted form of payment. And in a world, is it not interesting? And I'm not saying I'm against this or for this. I think I'm actually more for it than I am anything. But in the past, this would have been gold, right? Would have been the reserve. And where everyone's like, no, I feel a whole lot more comfortable going with the digital asset than I do the gold. And funny enough, I think I agree with them. I do, but I can't tell you why. I mean, I couldn't tell you but strong conviction. But why?
The original founders, the dreamers about the digital assets in the crypto world, that's exactly what they wanted.
Yeah,
I mean, they built it off of the scarce resource philosophy, right? Thus, the mining and all of that.
There will only ever be 21 million Bitcoin.
Yeah, so they were literally banking on.
Yep.
DeFi banking, but banking on that the scarcity model would carry as much weight as gold as a value,
right?
As a unit of value has all the way through history. But it is interesting because you mentioned the word adapt, the way it's been adapting, because of the opportunity that's forming with internal, and by that I mean the different states and even federal view turning positively toward digital assets. Now you're seeing the digital asset world, the world of DeFi. They're starting. They've been for a while, but they're starting more aggressively to create. How do I want to say that? To create instruments that mimic what the states are using now. So whether they're in bonds or in whatever else they've got their treasuries in, right? They've got an equal instrument available in the digital world. Yep. So they can park it, and it basically functions the same way, but it's now in digital assets.
Right.
I think and you'll see that more and more as we go.
Talk a little bit about this point here, because I think it leads into the robustness of the conversation.
Yeah, so what we've got going on with this crypto market structure bill is Senator Loomis and other senators are pushing now for a September 30th deadline. And what this bill is essentially it's going to clarify which regulators are going to oversee digital assets, and it's going to better define the digital assets, the different ones. Are they tokens? Are they actually assets? Are they equities? All these different definitions. And so we're looking at September 30th. We're going to have, that's what they're pushing for.
Well, and I think that's really been the thing, right? Where's the certainty? And then tell me what the rules are.
Right.
I mean, that's something we've been watching I wish Harrison was here. I mean, we've been watching digital assets now for 5 to 7 years. I've had a lot of people asking me questions. I mean, I've had my eye on it. What our biggest challenge has been, and if you've been willing to go in, you've made a lot of money. I don't deny that. But because we're, there are certain elements of what we do, especially when we invest on behalf of people, we are regulated when we do that. So then it's like, okay, so if I'm going to go invest on someone's behalf, you have to tell me what the rules are. You got to tell me how I can stay within the rules. And until the government defines the rules and tells you, okay, if you color over here, you're in the gray, and here's where you can play within that. That's what I love about this. Like, okay, fine. Tell me what the rules are so I can now play, right? So I can be in on behalf of my client. So if anybody's watching this, like Eric, again, this is more on the actual, advisory relationship side of things, or where we're actually making decisions of what we're going to own. We've been watching the asset class. It's just been like, we need the rules defined. And so this is,
and that's really the tension of the digital space right now, because there are aspects. I mean, we're needing that because we are operating in a regulated environment. It's important. It's good. Exactly what you said. There's a whole nother undercurrent, right, of people that and proponents of digital assets that they're like, we're trying to skirt that whole thing in the first place.
right.
So there's an ongoing tension with that, but the ability of the country to be able to engage, and this is the way I would say what you were saying, Eric, is that definition becomes really important for it to continue to grow and gain credibility and access. So regardless of whether people are happy with the definition, the more we get things defined clearly, the more we can play.
That's right.
And other institutions can play with with more definitions and clarity.
And for a shameless plug, if you want updates on what's going on in the digital asset market, Carson every week puts out a report on what the latest news is that's going on and what's happening, and then we come in here and talk about it. So
the Rich Report is rich with information.
And there's a specific page and everything dedicated to what's going on from digital assets. So if you want to know where we get our news, it's right here. You can get that same news by getting a subscription to the Rich Report.
That's resources.kingdomroi.org/Rich Report.
There you go. Go get a copy. Come to your email box every Monday.
And by the way, one thing I thought of when you mentioned gold is you can kind of have your cake and eat it too, and you can buy a gold-backed digital asset. So.
That is not a solicitation to buy
not.
or a recommendation. That is simply a point of conversation.
Yeah, it's a funny nuance. So I wanted to talk a little bit about China. We've got some trade deals going on with the EU, and we had Vietnam today. The U.S. and Vietnam ended their trade talks and agreed on something. In China, what's going on now is where we came from was previously we were over 100% tariffed on China. 145 and I think 150 something at the highest point. And since they've made their agreements, China right now is sitting about 30% is what our tariffs are on China for their goods. And so what they're doing about this is their exports to the U.S. is down 30% year over year, more than 30%. And their exports to Southeast Asian countries are up 18%. So they're exporting more to these countries. And then another thing that they're doing is something called transshipment. So what that means is they will send products to Mexico or Vietnam or another country where we have a free trade agreement, and they will send us those goods from China to completely bypass tariffs, which is sort of a legal loophole, a gray area, because we have free trade agreements with those countries. And the U.S. Customs has launched over 80 active investigations due to suspected transshipment. So China's trying to find a way around the tariffs, so they are much lower than they previously were.
This is one of those things when we're talking about the effect of tariffs, what will work, what won't, and the trade agreements, and will the trade agreements. Here's something that I'm becoming more and more convinced of, is the reaction and initial response. You know, I'm even talking about weeks out. Now we're just a few months into this whole thing, right? But even weeks out, the reaction and initial response is not what you can expect long term going on with the whole tariff situation. This is a great case in point, right? They're dumping right now. China is dumping a lot of their stuff in other countries. A bunch of it's going to the UK. Is that correct?
Yeah,
do you see that?
UK, Southeast Asia.
Going to the UK, Southeast Asia, and everything. They're trying to move things because of what they're having trouble doing with the US right now, and it's getting around the idea of paying the tariff itself. So and then you have the transshipment thing. So they're doing a lot of things to see what they can do to fill in the hole, fill in the gap without just facing it, right? Facing and adjusting to it in terms of paying the tariffs. And so we'll see that go on. But the question is how will this look ongoing? Well, that's going to be based off of what kind of success that they have. One of the things that I've seen a lot of reports on, it's this statement that Trump is banking on that the U.S. is the most desired market in the world to sell to, right? So he's banking on that. Again, will that work? It's
well, I mean, so question, this is an interesting.
But that's where he's going. I'm saying so that's what we're watching as this plays out, which is not done playing out yet.
No, it's not. But I want to point out, because this is there are statistics, and then there are statistics and lies and made up. I forget what the exact phrasing is. But I was looking at this. I was like, this is an interesting point. Exports to the U.S. are down 30%. Exports to Southeast Asia are up 18%. You hear those two numbers, you go, okay, down 30, but they're up 18. 18% of what number?
Yeah, exactly.
30% of what number? Like this could be a fraction. This export's up. You said, oh, well, it's not as bad for China. They're figuring out, no. They haven't been exporting as much to Southeast Asia. That 18% is not near as what they've lost in the 30%. There's a bigger game being played here. And when you throw out statistics like that, if you're not paying attention to what's going on in the numbers behind, that's why we do this. It's why we do other things. If you're not paying attention to the numbers behind the statistics, you may actually think something's happening that's not happening. And that's why, again, watching how they're trying to get around the free trade agreements and everything else.
To that point, if you're excuse me, if you're thinking, I'm using my hands here. Sorry. If you're looking at them increasing their exports to Vietnam and to Cambodia and to Malaysia, the populations of those countries are very, very small as compared to 30% down in America, right? That's what you're getting at.
It is, yep.
And you have to pay attention to that. So the reality of those numbers is an important thing to watch. That's why I'm saying they're feeling things out. They're trying to figure out what paths they can take, what roads they can, without having just to face the tariff.
I think the other thing that's going to be interesting to watch longer term is what we know is demographically China's in trouble. Right? So are we...
And economically.
Economically. So how long will they hold out? And maybe they've got the patience to hold out for a long time, but how long will they hold out before they really start to feel all the pressure from demographic, from a tariff, from everything else, that they don't have a choice but to begin compromising? And I think that's one of the things that this administration is betting on. Not only are we one of the strongest economies, but we've got the ability to wait them, even if we don't like it temporarily, we probably have a better ability to wait them out than anybody else around the world.
Yeah, that's such an interesting thing, and how the trade surplus that China has right now, how that plays into all of that, right?
Correct.
So because you hear surplus, you're like, oh, but they're in good shape, but not really.
Yeah.
Okay.
And the funny thing before we move on about transshipment is that they're on paper, their exports to the U.S. might be down 30%, but they're still importing through a
Backdoor.
Right.
to America. They still need us, is my
No,
point.
absolutely. No, they do. But again, that's why I think that there's more negotiating power than I think people realize.
Yeah, yeah. So I'll just touch briefly on Israel and Iran. We had last time we talked, I remember in our last war room, I said there's been no direct U.S. involvement.
Nope.
Since then, there was a little bit of U.S. involvement.
Just complete destruction
Just
of their
just
nuclear.
a little bit.
Just a little bit. So on briefly, June 13th was Operation Rising Lion. Israel struck Iran's nuclear facilities and killed some IRGC commanders and some nuclear scientists. And then a week later, the U.S. conducted strikes on Fordow, I think it's Natanz and Isfahan, which are the nuclear sites, using bunker buster bombs. And then just a few days after that, I mean, there was back and forth after that between Israel and Iran. Iran did strike one of our bases, one of the U.S.'s bases in Qatar. It was actually that, by the way, was, and this might even be a little bit of news versus noise, but that strike from Iran to our base in Qatar was as peaceful as a strike could have been, meaning that they called Trump beforehand and said, evacuate your people, we're going to bomb you, we don't want to harm anybody, and that's what happened. Nobody was harmed or anything of that nature. And then since then, we've had a ceasefire just a few days after we dropped those bombs in Iran, and that's been holding. Of course, right before the ceasefire started, because there was a certain time that these things start. Right before they started, everybody sent their last missiles.
Yeah, of course.
Both sides, yeah, that's right.
Yeah, exactly. But we've got a ceasefire holding as of today.
Well, and stay tuned for News versus Noise over on our Iridium Intentional Ownership channel. I think tomorrow we're going to spend time talking about World War III.
Yep. Just a little foreshadowing for you there.
Well, that I think one of the interesting things in terms of the things we need to be paying attention to is, so immediately after that, there's the NATO summit, and what the reaction of the NATO summit in context that the Iran bombings has just occurred, to me, is very, very interesting in terms of going forward and the ability of some of this to get ironed out or come to some sort of resolution, because there was no negative response. And no is maybe too absolute, but there was really not any significant negative response to Trump's bombing Iran. And that's, I think that's really, really significant in terms of kind of all what's going on in Europe, what's going on with the Ukraine-Russian war, what's going on in these other things in terms of the economic situations, the G7 and all of that's going on too.
It seems like most countries want peace, and most countries don't want war. The last thing I had for geopolitics is the One Big Beautiful Bill, which I mentioned a little bit earlier. A few things that this covers. It's mostly a tax bill, but there's plenty of other things on it. Some of the main things that people have probably heard about the bill is the no tax on tips, no tax or at least decreased tax on social security for the seniors, no tax on overtime pay, and tax cuts for Made in America products. Of course, there was decreased funding for Medicaid and SNAPs proposed in the bill, and that's one of the main points that people had a problem with. And this has been revised, I believe, in the Senate, and we're today the House is having a floor debate about the bill. So we don't have anything fully passed yet. The revised version, I believe, passed the Senate. So we're waiting on. I
think we could probably talk about this more in our next war room. I think the number one thing, if I keep looking at this, like I've seen reports that this is going to raise the budget deficit. I mean, I don't know. I'm not speaking into the specifics. Here's my number one comment / concern for the longer term. We as a country can't keep spending the way that we're spending. So if you think of a household who's spending over their budget, who's borrowing on credit cards and everything like that, what we have is basically one parent going, well, I guess we'll just stop eating out. Another parent going, well, no, we just need to turn off all the cable. Another parent's like, well, we're gonna wear used clothes, I mean, and then everybody's like, well, I don't want you to take away my Netflix shows. Right. I don't want you to take away my eating out. I don't want you to take, and everybody's like, you can't take away my thing. And it's like, we are gonna have to hit a point, or we may hit a proverbial wall. And I don't know nobody knows what that looks like, right? But there has to be, quit playing with this political football, and can we have a real hard conversation about, we are in a deficit. And instead of worrying about re-election, can we learn about the concern of the country and say, hey, everyone's going to have to suffer? Because it may be that we have to cut. I mean, with the deficits we're running, we may have to stop eating out, stop using Netflix, we may have to do all of it. And But we don't seem to have the political fortitude to want to have that conversation. We want to have the I want to get reelected conversation. And
midterms.
Midterms are coming, or I want to get reelected. That bugs me more than anything.
Yeah, it's really a shame that we can't contemplate things really based off of how quickly can we get to the solution that we really need. Because when we got our legislators and their definition of serving their constituents is, I've got to figure out how to get the pork that our state wants, needs, whatever. And so that's where all of the grappling happens, right? Instead of thinking in terms of, okay, if we do kind of all buckle up and shave off here, and then we release the ability for new businesses and all that over here, and we release energy over here, and we release, then if we do that collectively and really tackle into that, we could both stop spending irresponsibly and ignite a wave of economic growth. They don't have to come, and it doesn't have to be a 20-year rebuild after going through the suffering.
Sure.
Right?
Yeah, absolutely.
It just means everybody's got to be willing to take whatever lumps going into it in order to get out on the other side.
Right.
So I agree. We can't just keep kicking the can down the road.
They'll come to roost at some point.
I think that was probably a perfect analogy, by the way, about the household and spending. I think that was good. So we'll end on some good news, some good topics. So this company in China, BYD's megawatt charging tech adds 400 kilometers of EV range in 5 minutes. So I think for clarity,
5 minutes of charging?
5 minutes of charging.
Yeah.
For clarity, I think, would you say the average is maybe 30 minutes to charge up to 80% for an electric vehicle? That's what I've seen.
It's somewhere in that range, yeah.
Yeah. So imagine 5 minutes is crazy.
That's crazy.
And that's the thing that holds people back, I think, the most from buying an electric vehicle is the charge time.
Well,
charge time and range.
If you have it, if in comparison, then if you've got somebody that stops on a trip, a charger that they can have access to that charges in 5 minutes, now it's comparable to stopping and filling your tank with gas.
Right.
Absolutely. Yeah. No. I mean, we experienced that in California. I remember the frustration. I was like, oh, it's going to be fun to rent a insert name brand electric car here. So we had rented one, and then it's like we got to charge it before we return it, and then trying to find a charger, wait in line for the charger, and then it was like, oh, I guess for the next 45 minutes we've got to go walk around this shopping center while this thing charges, and all I've got to do with a gas powered vehicle is pull in, fuel it up, and in 3 to 5 minutes I'm out of here. Enough time to go inside and get a soda or get a water. Not the same thing with. Right.
Your best option might be to stop at a Buc-ee's and then charge your car there, and then you've got plenty of shopping time.
Yeah, then I'm going to spend that much time in Buc-ee's anyway. Yeah, that's what Buc-ee's is missing the opportunity.
Well, I think they have the stations now.
They do.
Yeah.
Yeah.
And then the last little point I wanted to bring up was that 2025 data projects the lowest violent crime rate in the U.S. since 1968, with murders and property crimes at historic lows. That's a great thing to see. And I think that, unfortunately, I don't think the mainstream media will bother to report good news like that. I think it's more beneficial to them, I don't know the correct word, but it might be more beneficial to them to report on crimes that do happen, and maybe to create division, maybe not. But I think just looking at the actual data on violent crime is really interesting.
Well, I'm going to make one last plug for your copy of the Rich Report, which is this section that I love, this page you do on the good news. And there's two things that I wanted to hit here. One, you're talking about lowest crime rates, but as Americans' incarceration rate is about to fall off a cliff.
Yep.
U.S. prison population peaking at 1.6 million in 2009 is projected to drop to around 600,000 by 2033. I mean, we've seen that over and over. Incarceration seems to lead to just recidivism, meaning people coming back into the incarceration. So can we find other solutions? That's a positive, right? We're finding other solutions around that. But this is maybe my favorite point that was in here is U.S. heart attack deaths down almost 90% since 1970. My grandfather died of a heart attack. My uncle died of a heart attack. I've lived my entire life going, oh my goodness, I could have a heart attack. We have all sorts of technology today that's available
Modern medicine
to tell us. I mean, even to the point of the other day through my health screening and my blood work and everything. I don't know what you guys get done. I'm just talking about my own blood work and my own health screening. Like I went and had a heart CT scan done so I could know, fortunately, all my blood vessels are clear, like everything's clear. I don't have any plaque. I don't have anything. I take a baby aspirin every morning. And so we're at this level of education, and the information we have available to us so much more powerful from a medical standpoint than what was available, to our parents, our grandparents, our great-grandparents, and why we're seeing longevity, and what a great time to be alive.
Yeah. And who knows with AI, I see every week, I see something new about AI, specifically in medicine, doing something crazy. Not even the robots, but just from a research perspective and developing new drugs and things of that nature. I just think it only gets better. So I love to see those statistics.
Well, and the only way you're going to know all this is to get a copy
The only way.
the Rich Report sent to your mailbox, your email box every
way.
Monday. Carson, thank you for putting this together and us being able to get together again.
Yeah.
Yep. All right. See you in 2 weeks for our next edition of the War Room. Everybody have a great day.